Welcome to TheoTrade. This is Don Kaufman. It's July 13th, 2016. I'm back in the saddle again after being out in Chicago for a couple of days. Watching markets today is like watching paint dry. So what's really going on inside of the market today? Well, the S&Ps right now are massively unchanged. They're up a whopping point on what has been a relatively quiet trading session. We still have 15 minutes to go to the cash close. Anything is possible, but we're only doing right now about 1.5 million S&P contracts, which when you look at some of the volume lately, and again, not everybody necessarily equates to, well, what's the volume in the S&P futures? You should. It drives a lot of the order flow out there. Again, things really starting to kind of quiet down inside of the overall markets during this entire up move. But we're lucky to do 2 million contracts a day in the S&Ps as of late. With that being said, what the markets are ultimately doing right now, well, guess what? It's an awkward pause. I mean, that's the only way really to describe the market. You can't necessarily start pointing a finger and looking at individual equity products. Why? Oh, look at Google. Yeah, it's 0.3%. It's down. Look at Amazon. You know, Amazon is entertaining. There's no doubt about it, huh? Prime Day over there. Come on, you know you bought something. You know on Amazon Prime Day you bought something that you didn't even need. You just wanted to be involved in the day. Yeah, lots of traders right now are looking for this key reversal, but to me, you can't read into anything. This is the awkward pause that we're getting before everybody's earnings announcements. So with that, yeah, Amazon, its earnings are a little bit further out. Granted, it's still 2 weeks away. Neither here nor there. Things are going to start to get a little bit more entertaining on the earnings front right now. As we know, we have been in what we've termed an earnings recession, right? And that just basically means many companies out there, yeah, their earnings look spectacular because of stock buybacks, right? Get some stock off the float over there. It's ultimately textbook to actually run earnings up. Shh, don't tell anybody. The CEOs don't know that you've actually figured that out. Nevertheless, we're in a bit of an earnings recession. We'll see really what some of these tend to look like. Again, I look at Netflix over here because what is more entertaining than a Netflix earnings? I mean, it's like going to a car race over there. You know, you're not going around to see the cars in the circle. You're going there for the train wreck. So again, the market has this awkward pause right now. The banks are at the end of this week, and the banks are really going to kick it off and talk about the awkward pause. You look at the XLF, absolutely nothing. But we're going to see earnings from the likes, okay, in the next couple of days of the Citis, the JP Morgans, okay, the Wells Fargo. They're all on the table over there. Either they're coming like Thursday, Friday, or the following Monday. Nevertheless, markets have slowed down to a degree. And I'm basing this also specific to the SPX. If you look at the expected move, now this is a one-day option, but it's a monthly option. It expires Friday morning off of the opening settlement. There's only a $13 move. Insanely low. All of a sudden, we go from this extreme volatility to a rather docile volatility. If you're more comfortable looking at the spiders are ultimately projecting only about a 17-point move in the SPX through Friday's close. People, that's quiet. And I'll tell you why it's quiet. On a day-to-day basis, we've seen more than a 20-point range recently in almost every day in the S&Ps. And again, I'll go back to the S&Ps. Today, things really did quiet down, but we've seen much larger ranges as of late. And that's actually been something I've been harping on nonstop over here is, listen, look at the ranges and then look at the volatility. And it's like, okay, the two they just don't really, have they gotten together and talked yet? Probably not. But we're actually decreasing in some of the trading ranges as we explode to the upside. Nevertheless, if you look at the range and even the overnight trade over here, this has been extremely tight, what they kind of term like a kind of an inside trading day as to what we've seen, again, compared to late. So, again, here we are, the awkward pause. There isn't much to talk about in individual equities. You don't want to force anything right now, okay? Whether that's us talking about it or whether you trading it, you don't want to force anything in a market environment that literally is pausing. Are you bullish or you bearish? I don't know. The whole market's about to enter into the binary event. I want to see what the banks are doing. People want to see, individual stocks. Are they absorbing currency risk very well from what happened with the British exit? I know I mentioned it, the Brexit, but it's going to have some currency reverberations back to the market. However, I kind of feel like most of the currency issues are probably going to be in this next quarter, not necessarily right now, but further on down the line over there. There is one thing, though, that is interesting. It's in the news. And we have whether you guys are aware of this or not, we've got a day-to-day, an author currently writing under the name of Heisenberg. And if you've never seen this before, just go to TheoTrade.com. All right. And after you've got to TheoTrade.com, just check out right over here. It's under the blog. It's called the TheoDark Report. And the reason I bring it up is because, again, market's in an awkward pause right now. Not going to force anything, not going to try to execute a lot of trades until we really start rolling out some of the earnings. But I've been reading these. All right. So we've got a number of different, columnists, authors, under the name, of course, of Heisenberg in here. And there was something that really stood out to me because I've been following the bond markets an extensive amount as of late. Obviously, bonds around the world are trading in just uncharted territory. But this is actually the central bank balance sheets as a proportion of GDP. And, I'm reading through this the other day, and I was flying back from Chicago really late last night, and this just resonated with me. If you see this odd line over here, and I'll explain it here momentarily. If you see this odd line that looks like an escape velocity, that's nothing more than the Bank of Japan. So the Bank of Japan ultimately is going into a stimulus program, the likes of which no one has ever seen, ever even heard of. And what it really amounts to, I'm going to be looking for some trade opportunities in here in the next couple of days, the next couple of weeks, as the Bank of Japan is rolling out what has been termed helicopter money. In fact, they even invited none other than Ben Bernanke, over to Japan to have discussions, which is kind of entertaining given the fact that Ben Bernanke is actually currently employed by none other than Citadel. Nothing wrong with that, but it is one of the biggest trading firms on the planet. Anyway, you got to wonder, is he going there to actually talk about the economy, or is he going there looking for a monstrous trading opportunity on the other side of Japan? This, to me, again, balance sheet versus GDP, proportion to the GDP. This, to me, looks like an absolute, without unequivocation, this is a Hail Mary pass at this point. They are, and again, this is all prior to what was just announced. In Japan, they are going to kick in the largest stimulus package, what they've already been doing since when? You can see this massive divergence back in 2013. It's had absolutely no effect. Now, they're going to step it up to which the likes the market has never seen before. Effects of it at this point, who knows? But again, these articles are well worth taking your time and reading through. Again, I read a tremendous amount in the markets. We're happy to have the Heisenberg crew on board over here. But again, love the title over there. And common sense. It's more helicopter talk. And again, this goes back to what they used to talk about with Ben Bernanke, Helicopter Ben. It's actually a theory of what they call dropping money from helicopters, see if it stimulates Japan. But again, we're going to be looking for some trading opportunities in the weeks to come inside not only of Japanese markets, not necessarily the yen, but some of the reverberation and the effects it can actually have on not only our bond markets, but our equity markets as well. So thanks, everybody, for joining us here at TheoTrade. I'll be back on tomorrow. Again, maybe we'll get a little action in the S&Ps tomorrow because it does in fact look, with 6 minutes to go to the close, we're going to be putting up the big donut tonight, massively unchanged. Thanks again for joining us here at TheoTrade. Have a great evening. Bye-bye.